Welcome back to Beyond the Trade. Tonight, we're tackling the one thing traders ignore until it hurts: taxes. Joining us is Phil, a licensed tax pro who works with active traders and investors every day. He's here to help you keep more of what you make. Let's get into it.
Welcome to Beyond the Trade, where the levels don't lie, the trades hit hard, and we're here to cut through the noise. No scripts, no safety nets, just raw market talk. Lock in. It's time to go beyond the trade.
Beyond the Trade is for educational and entertainment purposes only. Nothing you hear should be taken as financial advice. Always do your own research and consult a qualified professional before making investment decisions.
Well, Phil, it is great to have you on, our first guest
Yeah,
here.
welcome, Phil, to Beyond the Trade.
Awesome. That's awesome. I'm glad to be here, guys. Thanks for having me.
I think that having you on to talk about taxes is something that's incredibly important as we enter the year end. We're now in November, but this goes for any time really. It's going to be important to hear about how should we be feeling about taxes. A lot of people don't even think about it, just like Acro just said. And hearing the details about how it works, is very important, and we're excited to share with everyone.
Yeah, absolutely. I'm excited to be on, and I didn't growing up. I did not know anything about taxes. My granddad was a CPA, and he always warned me about taxes, and come to find out years later that I'd be interested in it too. And it is something that a lot of people don't know a lot about. They don't teach it in schools unless you go to school for that to become an accountant.
Yeah.
But the main thing is just education. I mean, I think that everyone should be able to prepare their own tax return. But it starts getting more complicated when you have a lot more activities, and so that's where people like me can help a lot. Just save dollars where it's a lot of people. There's easy ways to save quick money, and when you go to file your tax return.
Awesome.
So
Perfect,
Great
man.
point you made, though. So my first question would be, I mean, there's a lot of young traders out there who, they're trading what they can, and maybe they have some gains and losses throughout the year. But when it comes tax time, they're not an itemized type filer. They're
right.
taking the tax credit that's given to them. Is there anything for them that they should be aware of, or if you're not able to itemize, or are you kind of left out?
No, yeah, no, absolutely. It goes for anyone, whether you itemize or you take the standard deduction. As many people do not know, Free American is is given a standard deduction, right? Say you make $100,000. I think this year for single filers, it's going up to about $15,000. You can exclude. Instead of being taxed on $100,000, you would be by default taxed on $85,000. Now, if you itemize, you have to beat that threshold, right? And what goes into itemizing is four very specific things. There's medical expenses that you can deduct or take towards your itemized deductions. There is state and local taxes, SALT taxes that you can take. That includes property taxes, sales tax, state income tax, everything under that umbrella. Then there's investment interest and mortgage interest, which is pretty straightforward. If you have a loan to invest, you can deduct the interest there, and then also charitable contributions. So if you give to charity, you can make those deductions towards your standard, but you have to beat the standard deduction for it to make sense to itemize.
Okay. So for the average person, I guess if they did the quick math and say they had some medical bills that weren't covered by their insurance and all the things you mentioned, add them up. If they're over 15,000, then they should definitely be itemizing.
Absolutely. I mean, it'd be advantageous and smart. And I usually tell people if you don't own a home, you probably won't be able to itemize because the big thing for itemized deductions is that mortgage interest and property taxes. And so if you don't own a home, you probably didn't give over 15,000 to charity. If you did, good for you. That's awesome.
Yeah.
But likely you're not giving over 15,000 if you don't own a home, right?
Okay. Cool.
So that's that. But in terms of trading, yes, every person in America can take $3,000 of losses every year. It's capped at 3K of losses against their active ordinary income. Right. So say you have a W-2, which is W-2 is what your employer will give you at the end of the year to file to tell you how much you made from working there. And you can take the $3,000 of losses against that active income. Now you might ask the next question, well, Phil, I lost, I had $20,000 of capital losses.
Have you
So
been
I don't
looking
get
at my portfolio?
Nah.
yeah, exactly. I mean, hey man, it's there's some good things in losses too, and we can get into that.
Well,
But
Phil,
yeah, go ahead.
before we get way too far, I do want you to tell everybody about your background a little bit so that they
Yeah,
know they're talking to a real professional here.
yeah. So I started in tax right after college. Worked for a smaller public accounting firm that actually was acquired by a couple people that came from a big four accounting firm. And so I was involved in all of the kind of the learning curve for them because they came from higher up positions at a big four firm and they didn't really know how to run a smaller firm as well as someone that had been doing it for 20 years. So I got to really learn not only the tax side of a public accounting firm, but also just the business aspect of a public accounting firm for a couple of years. And at that firm, we did any type of return under the sun. We do your personal return, your kid's trust tax return, your wife's ILIT trust tax return. We do your charitable remainder trust tax return. We do if you had a nonprofit, we do that. We do your law firm tax return. We do anything you want us to do. We prepared it.
Nice.
And after that, I've moved. Just recently joined a commercial real estate investment company, and I prepare all of their entity tax work. If you know anything about real estate, you know that usually when you buy a commercial property, you don't buy it via yourself. You buy it via an LLC or an entity, and that entity has to file its own tax return. So I'm very versed in real estate tax returns, and then also for a lot of people have portfolio entities that they just use to trade with. And so I'm very well versed in how your portfolio is presented in a company type setting, and then also how it flows to you ultimately to be taxed. So have a lot of experience doing every type of tax return. There's nothing I have not. I mean, there's maybe a couple of things I haven't seen, but for the most part, there's every tax return is different. Everyone has a unique situation, and so I've dealt with a lot of different tax situations or complexities.
And you also trade on the side, of course, and that's why
I
you're here
do.
to be on
That's why I'm here.
Beyond the Trade, baby. Perfect. Thank you for that intro,
Beyond the
Phil.
trade.
And I mean, I think something that we probably should continue to touch on is the tax loss harvesting.
Yeah.
I know, I kind of cut you off there, but I think we should. I mean, continue to. What else do you have to say about tax loss harvesting? Obviously, that 3K that can go towards your ordinary income each year. But say I have 20K in losses, right?
hmm So that is actually carry forward. So you can carry forward those losses indefinitely, and that's very very beneficial for. I always say tax is a game of deferral.
Hmm.
You're never gonna not pay taxes, but you want to be able to defer or shift high income years to lower income years, right? And that brings up a great intro to just general equity trading and tax favored investment accounts. And I saw a comment on the screen earlier, but someone had a question on a IRA. I guess we can start off with that as some of my favorite investment accounts. If you don't have one, you should definitely utilize it. Is a Roth IRA.
Ding, 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 ding,
Gang,
ding.
Roth
I
gang,
can't get the bell to go off.
hit the bell.
Yeah, Roths are a little bit tricky because they do have limitations to them. But it's the only account where you can use post tax dollars to earn, grow your money tax free, and then distribute it to yourself at a later date.
So hold that thought for a minute.
Yeah.
Just to step back, let's say a trader had a $20,000 loss last year.
Absolutely.
He was only allowed to write off, what is it, 3,000, 3,500?
3,000. 3,000.
Okay.
Yep.
But now moving forward, he has a $20,000 profitable year the following year.
He'll only have to pay tax on $3,000 in the following year because that 17K loss that carry forward to the next tax year, it can offset his gain in the next year. So
Okay,
you'd only have to
awesome.
pay tax on
And that was, see,
3,000.
that's something I was confused on, honestly, was I know that I can write off 3,000, but even though my
Mm-hmm.
loss was larger and I can't write it off, it's still there.
Still there. And there's a form. So the form you file when you go to file your 1040, and that's the individual tax form. There's another form included on there that you'll attach. It's called Schedule D, and Schedule D tracks all of your capital gains and losses.
Okay, I got you. Cool.
Yeah, so Schedule D is one you want to look out for when you go to file your tax return. It should show in detail your gains and losses and the nature of your gains and losses, whether it's short term, long term. Highlight if it was a capital gain distribution. Sometimes you'll see that. And then just income, capital gains from partnerships or, we can talk on this later, 1231 gains, which is a little different, but it is still considered a capital gain.
I think that's
No.
important because a lot of people that I know think, well, I lost all this money, but I can only write off $3,000. But that
Yeah,
money,
exactly.
you can only write off the 3,000 for this particular year's tax year. However, the rest of that, the 17,000, is still there, and you can utilize it. You can go back and grab that to help you offset gains in the future.
And
Absolutely. Yeah.
and an important question that I know a lot of people have had, at least to me personally, is once you have those losses that are being carried forward, you can tell us about the nature of using those for both short term and long term, because there's a certain way that those are used, and how does it offset?
Yeah, yeah. So no matter what type of nature the loss is, short term or long term, it will count as the same thing. So if you have, let's say you have out of that 20K of losses, 7,000 of it's long term and 13,000 of it's short term. It will, and then the next year you have 20K in short term gain. You only pay 3K on the short term. It doesn't matter the nature on the carry forward. It's all losses. But there is a difference between short term and long term capital gain, and those are taxed differently. Short-term capital gains are taxed at your ordinary tax rate. So say you fall into the 30% tax rate bracket. You will pay 30% tax on short-term capital gains, which is any security or asset held less than 1 year. Compared to long-term capital gains, usually most people fall into the 15% tax rate category for long-term capital gains. But there is situations where you can be in the 0% tax category or the 20% tax category. That just depends on your income that you had that year. So, and I can kind of highlight some of that. But if you are single and you make 48 to 533,000 in taxable income, you're in that 15% tax bracket. If you make over 500K, you're going to be taxed 20%. And usually they'll
Damn
throw
it.
on a three. Yeah.
It's a pretty large bracket.
Yeah. They will throw in, and also they'll throw on a caveat 3.8% in net investment income tax on that 20%. So really you're paying around 24% if you make over $500,000 on your capital gains.
I can only hope to have
for a
those
long time.
problems.
Yeah, no, it's a first world problem for sure, but it is something that people are like, "What? I thought it was long term. I thought this is 15%." And you're like, no, actually, you made too much money, and there's we got to pay for something called Obamacare somehow. So
So if I have 514 in income, I should be giving a 15,000 charitable donation to get under there, right?
Yeah.
yeah, exactly right. You should be.
You
Yeah,
should definitely be
yeah.
itemizing at that.
You should be itemizing. You should own your own home, and you should be giving a charity, and probably have some investment interest, or be trading with some loans. But yeah, no, that's pretty much the key for long term, short term, is that it's really you really, if you can, you want to hold it for a year, especially if you're long on the stock, right? If it's if it's something you're like, all right, I can sell it. I want to. It's probably gone as high as it's going to go. I need to take some profit. If you're not at that year mark, just I would say stick it out, because if if you say you lose 7% of profit from holding it for 20 more days, well, that's about how much tax you saved about
Yeah.
10% in taxes
That's a
just from
great
holding
point.
it.
That's a
Yeah,
I
great
had
point.
that happen to me, I think two years ago, maybe 3 years ago, where, and I forget what it was, what stock it was at this point, but I had held it for throughout the year, and it was not doing great. It kind of, just flattened out towards the end of the year. But it did strike my mind to think, well, wait a minute, if I hold this at least until January 1, I don't have to pay short term. I can pay long term. And the only time in my life in trading that ever came to be an issue.
yeah, yeah. I
I'm
mean,
I'm
it's a
more
big,
I'm more of a day trader, so I trade
yeah,
options daily,
yeah.
where Adam is more invested in the long term holds. For me, it's a lot different. Everything that I trade is pretty much short term capital
Short term.
gains.
Yeah, exactly.
On that note, how are options treated? How
Hmm.
about selling puts, selling covered calls? How are those treated tax wise?
Yeah, no, that's a great question. Yeah, so I mean, if you like, let's say you're selling options, right? So you would, I'm trying to pull up this example. I found one earlier that's good. Um, but yeah, if you're going to close position by selling the option, the holding period determines whether it's short term or long term. So it's pretty much for most option traders, it's all short term.
Yeah.
And you buy, let's say you buy a put option in May for um, $300. That's the $3 premium at 100 shares, right? And sell it in September the same year for $200. So you'd have a short term loss of $100. However, if you sold the same option and held it for a year, a longer option, you would it would qualify as long term. So it's pretty much simple. Now there is something, if you sell future contracts, you can qualify for Section 1256 hurdle, a straddle or hurdle, which will actually, they split those into 40% short term, 60% long term, and
Interesting. We
that's
have some
yeah.
future traders in our group that might be interested in that.
And I think that's
Uh,
why a lot of people trade futures like ES and NQ. I mean,
yeah,
a lot of it is instead of trading SPY or options on SPY, a lot of people have migrated kind of towards futures, at least in the retail world, as it's become a lot easier with technology like Trade um, the tax advantages, like you said, are really nice.
yeah, no, they are. And that's why I like trading futures too. They're good. And they're called a straddle, right? And usually that's what the code is Section 1256 contracts. If you want to learn more, I mean, Investopedia has great takeaways, and they have great kind of tax tidbits on a lot of the trading. I use, I mean, anytime I have, I see a guy's 1099 that has a lot of options on it or futures, I always kind of look back at the 1256 code and see how I should treat it, or what how I should handle it. And that's one important thing to bring up that I didn't bring up before, and we probably should have started with it. But when you trade if you sell stocks, if you have dividend or interest income, you will receive a form at the end of the year called a 1099-B from your brokerage account that will detail all of your interest you made from cash sitting in their preferred money market account. It'll detail all the dividends you received from any equities you held, and it'll also detail your gains and losses, and it will give you a total of proceeds, basis, gain, right? And then any wash sales that would be on it, any REIT dividends, which REIT dividends are special because they give you, they're a kind of a tax advantageous dividend, or foreign tax credit. Usually when you trade foreign securities, they will withhold a little bit of foreign tax from you, and you can use that as a credit on your tax return. And the 1099 details all of this. If you've traded before and filed your tax return, you have definitely seen a 1099 from your brokerage.
Oh yeah, Yeah.
Oh yeah.
Yeah, that's a tax form, and a lot of people don't understand, don't know how to read it, but they're very intuitive. If you look at it, they're boring to look at. They're monotonous, but there is some good detail on there that people don't. A lot of people buy a lot of income type ETFs, right? And they'll give them
It's a good one.
10 to 15% dividend rates every month, right? You're getting a dividend every month at 10 to 15, 20%, whatever, if you invest in some of the higher yield ETFs. But a lot of times those payments to you, those distributions are not dividends. They're not true dividends. They're actually return of capital, non-dividend distributions, and those are not taxable. So the 1099
Okay.
will highlight a lot of that. Like, you're going to prepare your tax return, and you just said, well, in dividends this year, I got distributed $1,000, so I'm going to report $1,000. Well, don't do that, because there's different forms of dividends, and some of that could be return of capital on your end, which is just they take your money and give it back to you, right?
Philip,
Just to
that brings
supplement
up
your
an
tax
interesting
rate.
question, though.
Yeah.
If the average person, and I'll say myself included, I
Mm-hmm.
use TurboTax to do my taxes at the end of the year.
Yep.
Outside of my trading, I have a very simple tax return.
Right.
However, from a lot of what I'm hearing tonight is maybe it's better that I bring this to a tax professional, pay the extra money to have him prepare my tax returns, because does TurboTax pick up on stuff like that? Is it that intuitive that because what happens to me when I'm sure because you're a tax guy, you don't use it. I use
Mm-hmm.
it at the end of the year. I use E-Trade. E-Trade gives me a form that I just upload into TurboTax, and it has every trade that I've taken all year, and it
Mm-hmm.
does what it does. I never question it. Is
Yeah,
there
exactly.
some value in having an expert go through that?
Yeah, that's interesting you brought that up. I actually, when I was at the old firm, I couldn't use the tax software for my personal stuff, so I use TurboTax for all of my family stuff. And so I'm really well versed in TurboTax and prepare a lot of returns on TurboTax. And TurboTax is great. Honestly, it's one of the best softwares I've used. It captures a lot of detail, but for some more complex 1099s, like for you, I would say definitely go consult a tax professional
Okay,
over TurboTax.
interesting.
Just because, I mean, I'm not saying they would save, like, there's always a caveat in that, right? It always depends. Will your tax pros save you more money than they're costing you? I don't know,
Mm-hmm.
right?
Mm-hmm.
But I will say TurboTax does also charge a fee. If you can, like, it might even be worth just saying, "Hey, I got this 1099 from E-Trade. Can I take 30 minutes to 45 minutes of your time and pay you, for half an hour just to go over this 1099 and teach me all the interesting facts about it, or whatever's going on in the 1099. You
Interesting.
can tell
Okay.
me how to report it. That would be helpful, because I don't think because if you take your stuff to a CPA, they'll charge you to do it, and sometimes it's $1,000 to $2,000 fee, and you're
I
like,
was about
Right.
to
well,
say, what's the
I
going
didn't
rate?
save. Uh, it's usually, at the old firm, I was a senior level, about to be a manager, and my bill rate was $250 an hour. So if I spent more than 4 hours on your return, that at least was going to be, $1,500 return, which is crazy, right? But for some people that have a lot going on,
Yeah.
it's
Yeah.
definitely
Absolutely.
worth it for them. Yeah.
When I owned a company, I mean, it was money well spent. As an individual who I collect a paycheck, I have a home, I don't have anything crazy other than I trade.
Yeah.
It's hard for me to justify $1,000 CPA bill or a tax accountant bill, something that I can pay $75 on TurboTax. Which and if you pay the extra option, they'll actually defend you if you ever get, audited by the
Big red.
IRS.
Yeah.
But
I
it's
use a tax professional, of course, and I think it's money well spent. You get a thorough person to do it, and
Hmm.
you trust them, and I'm sure you can calculate an ROI on how much they're charging you. But I think this is a good word to the wise. It may be advantageous for those who have a lot of trading activity to really consider a professional instead of just
Yeah.
TurboTax.
No,
Anything that in your
absolutely.
own mind seems complicated, you're probably better off having a tax professional.
I could not agree more. There's a lot of people out there that I see that just have no idea really what a lot of this stuff means. And TurboTax is great; it's very intuitive, but definitely having one in your corner. I mean, you can't. I always bring up you remember those commercials where it'd be like dinner with your dying mom, or dinner with your family, 450. Dinner with your long cousin, $300. Dinner with your dying mom, priceless. Whatever. You know those commercials. I think it was like a
Yeah.
nationwide. It's kind of like that in a sense. I don't think I did that reference justice there, but
No.
it's
I
ki-
get what you
it's kind of you're kind
dinner
of paying for that.
with your tax professional, priceless.
Yeah, priceless, right? You're paying for that security, that peace of mind, security, and like knowing that, hey, if anything were to happen with me, I've got a guy in my corner, someone in my corner that can defend me
Right.
with stuff I don't know. And a lot of people think the IRS is a very scary agency, governmental arm. They're not. They'll send you very scary letters sometimes, but usually, we get them. I see them all the time, and I tell people, don't ever worry about them. Always send it if you
Hey,
get a
I've been
tax
there.
letter. Yeah, send
I've
it to a
been there.
CPA.
I've been
They
there where
will
I've owed a lot of money in taxes when I moved from the money grabbing state of Illinois to the wonderful state of Tennessee. And they
Tennessee's great,
basically seemed like they wanted to charge me for leaving.
pretty
Huh.
much. Yeah,
You
I mean,
know, it was
yeah,
like, it was disgusting what they're, but it worked out in the end. But
yeah.
it took a while to get it figured out. And I couldn't do it on my own. I had to have somebody do it for me.
on the IRS topic, do you have any input or opinion on, you know, Trump's potential, gutting of the IRS funding? Do you see that making any difference on, how you file tax returns, how just the whole process goes? Do you have any input
Yeah.
or take on that? You don't have
It,
to. I'm just wondering.
no, no, no. I do. I think about it a lot. But obviously, I'd be out of job. But I just don't. I just don't know. I feel like federal income tax, yields a lot of money for the government, and I don't know how he could end that. But if he ended that, that means sales tax would just go up a lot more, and
Mm,
so you're buying a candy bar at the gas station would cost a lot more with no federal income tax. And what that really hurts, who that really hurts, is the lower income class,
hmm.
by getting rid of federal income tax, because you know this doesn't matter if you have $1 million in the bank. Doesn't matter if you have $100,000 in the bank. Y'all are still going to need the basic necessities, and if those basic necessities are more expensive, then you're just hurting the person with less money, right?
And we're kind of seeing
So
that now with the whole SNAP thing and the government
snap
shutdown.
thing, yeah, yeah,
Yeah.
exactly. So federal income tax, I don't know how it'd be great if he could get rid of it. I mean, I don't like paying it,
Well, yeah,
and
it'd be great if we can get rid of it if the government was able to generate enough income.
revenue, yeah,
Yeah.
but
Where, yeah, here and every month you get $1,000 from the government. But let's be realistic. The more money they get, the more they learn to spend. I mean, I don't
exactly,
care who's in office. That's just the way politics works.
yeah, exactly
And I
right.
don't want to
No,
get
it's
political.
yeah, it's
I
hard.
don't.
I've run this line all the time because people, everyone likes to give me their political gambit when I tell them they owe money, and they like to get they like to give me that. So I always am like, hey, paying tax is not a bad thing. That means you did it, did a good job that year, and
Yeah.
you got to give your piece back. It's only
And we get
only
to
right.
enjoy the things that they provide, and that's what a lot of people I think forget about, especially in bad times. Well, what do you mean? What do they provide? Well, they provide, the national parks and things like
Mhm.
that we get to enjoy and that are being preserved. But
Safety and
I,
infrastructure
yeah,
and and of course
police and
local
everything.
governments are all different, and
Yeah.
luckily Texas doesn't have any state income tax.
I
Hmm.
hate paying it as much as anybody, but my God,
Yeah.
we get a lot of benefit from our taxes as well.
State
Yeah. Oh
income
yeah.
tax on with your federal, right? It's deductible, right?
So it's deductible on Schedule A only if you itemize. Oh, it depends, right? A lot of tax
Caveat.
questions. Yeah, I have to add in. Well, it depends. It is deductible on Schedule A, but that's only if you itemize. But if you don't itemize, then it's not federally deductible. Actually, so Trump actually did come out and it passed. It's called the One Big Beautiful Bill. And you may have heard of it. It's for short. They call it the OBBB.
Meta sure heard about it.
Yeah, oh, exactly. It's actually it's very tax advantageous, right, for people. There's a lot of good stuff in there, and now so your state and local tax was capped at $10,000. So if you itemized, even if you itemized, you can only deduct $10,000 worth of state and local taxes. Now it's getting up to 40 grand. So if you have high property taxes, which is in the state of Texas, you can deduct up to $40,000 on your Schedule A, which is your itemized deduction worksheet form. But yeah, no, that's interesting.
Being in Tennessee, I have no state income tax. It's one of the reasons I was very anxious to move here.
It's very good. You'll see your property tax is probably higher than in wherever you moved from.
No, I came from Illinois. My property taxes in Illinois were
$1 million.
Ridiculous.
Ridiculous, yeah.
Literally, my property taxes in Illinois were more than my home mortgages here.
That's crazy.
Yeah,
that is crazy.
Absolutely crazy.
Well, I love Tennessee. It's a good state.
Yeah. Shout out to Tennessee. Go Vols. Go Vols.
That was a rough weekend. Phil, I know you mentioned wash sales. I want to hear more about wash sales because I think not enough traders know about it, and in the context of both equities, commons, and also options. I know the verbiage on wash sales with options is a little fuzzy, right? Because it has to be an identical security, right? So do you have any words about obviously commons, but then also, what if I trade a Tesla? What if I take a loss on the September Tesla call, and then I take a loss on a October Tesla call? Am I getting a wash sale there? So both kind of sides of that I would love to hear about.
Yeah, so I'll give you the definition of a wash sale. So basically what a wash sale is say you have, XYZ stock and you buy $100 of it and you lose $20 and so you sell it for 80, right? And you have a $20 loss in the stock. And you go turn around and buy XYC. It's a tech. Let's say they're both in the tech sector, right? You buy another tech stock for that with that $80. What a wash sale does, what happens is you are disallowing that $20 loss, and it's just added to your basis of the next stock you buy. So that next tech stock you buy. So if you were to turn around and take the loss, your $20 would be suspended and added to your basis of that next purchase. To avoid a wash sale, you have to wait 30 days. What I tell people all the time is cash is king. Always have cash in your brokerage account. Always keep just running cash. Have cash. I mean, obviously, if when it's a bad day, when it's a red day, you want to be loaded up with cash. I think in any situation, you want to have a lot of cash in your brokerage, and wash sales are good for that. So how it kind of plays into tax loss harvesting is, say you have $10,000, you have a $10,000 gain. You bought NVIDIA in 2021, and you want to take some NVIDIA profit this year, and it's a long-term capital gain. You're like, sweet, I'm going to take 10K of profit on NVIDIA this year, still hold a little bit in my portfolio, but it's got too big. I want to take some profit. So you take your 10K, and you're like, well, I don't want to pay the tax bill on the 10K, and I have this other stock that is at a $5,000 loss, but I believe in that stock long-term. I want to hold that stock long-term, but right now I want to harvest some loss from that stock so I can mitigate my $10,000 gain. So you sell $5,000 and you're like, okay, well, I don't want to wait 30 days to buy back that stock, right? I want to buy it back as soon as I make the loss. Keep that 5K in cash and use the 5K that's free cash to buy the same of that stock. And then the 5K proceeds you had from the stock loss, just hold it for another 30 days and buy back in. Does that kind of make sense?
Mm-hmm.
Did I frame
Yes.
that right? Yeah.
Yeah.
So, And that's how you avoid the wash sale. If you keep cash in your account, you can use that cash to repurchase the stock you wanted to harvest loss off of, and then the proceeds that when you sold that stock are sitting there to replace your free cash. And then you'll wait 30 days and buy back in. But that's what I tell a lot of people to do, is always keep cash and buy. And if you have a big gain, look in your portfolio and say, okay, I believe in this stock long term. I don't want to sell it completely from my portfolio, but it's trading at a big loss. I want to utilize that loss against my big gain I had this year. So sell it and buy it back with my free cash right there. And that's kind of my tax loss strategy always, and that's how I get around the wash sale rules. Sometimes they're hard because you're like, well, this stock's dipping more. It's gonna boom in the next 30 days. Then you can't really get around it. But you never lose your basis, right? All that happens is the basis is added on to the new security. So you will recognize that basis in a sale later on, but at that trade date, you will, your loss will be suspended and added to the new security's basis or costs, right?
I think you're kind of covering one of the questions we had from Van Wyck, who's one of the guys in our trading group.
Yeah. What's his
He
question?
had asked perhaps one of the questions you can ask is how best to use tax software once we have trading status with the IRS. Do we input data manually since the online forms start wash sales as default?
So that's interesting. He's saying on TurboTax they don't recognize wash sales, and he has to put it in manually, or they do, or they default to it being a wash sale.
I'm not sure. Once we have trading status with the IRS, do we input data manually since the online forms start using wash sales as default? I guess maybe that needs a little bit more explanation.
Yeah, I think I know what he's saying. So he's saying, like, once you establish yourself and take a position that you're a trader and you have Schedule D activity on your 1040, the IRS is going to watch out for wash sales more often than not. Well, maybe.
Okay.
So what happens, and this goes back to the whole 1099 thing, right? So what Morgan Stanley or Charles Schwab or Webull will do is they will send you a 1099 at the end of the year, and then they'll send the same copy to the IRS. The IRS takes that copy, and that's how they compare your tax return. So if you don't report what's on the 1099, they will conflag you, right? And they usually do it off of proceeds. Now, there's different ways. Like I said, consult a tax professional before doing this. But if you were to input it manually, there are different ways, because usually the investment, the brokerages do mess up their 1099 reporting. Sometimes you'll even see, hey, you got a corrected 1099. I don't know if either of y'all have ever seen that before, but they'll send you a corrected 1099 saying, hey, we actually, some of this sale was a wash, or we're giving you credit back. It wasn't a wash sale because you held it for 30 days on the, So the 1099 is important. So you have to input the 1099 to not get caught with a matching problem, because they will match the 1099 you reported on your tax return to the one they received from the brokerage company. So always make sure to go off that 1099. But if you have disputes, like I said, consult a tax professional, and usually they can help you with some of the disputes. There's also securities you'll trade that the brokerage will not have your correct basis in the trade, right? And the basis is important because that's how much you're going to be able to deduct from your proceeds, right? So you want to make sure your brokerage has that basis. And if they don't, they will tell you on the 1099, hey, we don't have the basis for these securities. So you need to either go find it and report it to the IRS, or, we're going to give you the proceeds because the IRS is going to match off the proceeds, but you need to determine your basis on your own. And that's when a tax professional can really help you dig into that and see, hey, what's actually my basis in the stock? Because if not, you're just going to pay tax on the total proceeds, and that's not fun,
Very informative, Philip.
Mm-hmm.
Very
so
informative.
The 1099 is king, and always I would I would suggest anyone that, it would be beneficial just to go ask a tax professional for 30, sit down with them. If you have any friends that are tax pros or know any tax pros that would let you sit down with them and pay them $100 for the session, I think it's a good $100 spent just to learn what's on this 1099, how do I report it, and what does the IRS look for when, filing your Schedule D with your Form 1099 from that brokerage. So,
Good stuff right there, guys.
This is, I mean,
yeah.
this is alpha. This is whatever DD, alpha, genius, gotta know it, has the answers to every question. Phil, was there any other topics that you wanted to discuss?
Nothing really. I'd say the 1099 is king. I will say one thing. One thing I hadn't said, but this is in terms of the IRS and what I've learned through the years of dealing with them and preparing tax returns. There's really four things the IRS wants you as an American to do, and y'all all probably know this. And they want you to buy a home, as we've talked about with the Schedule A itemized deductions. You get benefit if you buy a home. They want you to own a home. They want you to start a business. There's a lot of tax benefits if you have your own business. You can deduct a lot more things. There's a lot of tax leeway with owning your own business. And then three, they want you to retire. So there are a lot of tax.
God, all those things align with me right now.
Yeah, that's what. Hey, well then you did it right. You lived the American dream, right?
I'm trying to.
Yeah,
I can't retire yet, but
and then
that
the
was
fourth
something
thing,
that was
yeah.
told many years ago was every American should at least have an LLC.
Yep, exactly. Every American should have an LLC. Every American should own a home. Every American should want to retire at some point or save money in a retirement account. And then the fourth one I didn't touch on is they want you to have kids, which is pretty recognizable with the child tax credits.
I'm checking 3 of those 4 boxes.
Yep, there you go. Hey man, I don't know how old you are, but hey, you're never too old, like De Niro, right?
No.
Yeah.
Hey, 62. I'm ready to start my next journey. I ain't dead yet.
Man,
You ain't dead yet. Kids are a miracle, right?
Yeah, that's actually the name of my alternative YouTube channel that I'm getting ready to start. Not dead yet.
Not dead yet. That's good. That's good. But yeah, I would say to touch more on the IRA stuff. Definitely, if you do not have an IRA or a 401k, or if you're self-employed, look into a SEP IRA or a solo 401k. Those provide insane tax benefits for you. And we can discuss more. If there's more comments, I can answer them too. If y'all have questions after the podcast.
Oh, dude, I would love to have you come back and
yes.
Yeah.
Yeah. I'm actually on the verge of I'm planning my retirement now. I'm 61. I'll be 62 in a few months. I
So if
don't
you
want to
wanted
work
to,
until
yeah.
I'm 70, right?
Yeah,
So
exactly.
I've got some plans that I'm trying to incorporate, but my problem is I didn't respect my money years ago. So
Yeah.
my retirement savings is not the greatest. And
Yeah.
I'm looking at alternatives right now to really boost that over the next, 2 to 5 years, which is difficult,
Mhm.
but it's one of those things that I think there's so many people my age that are in that same trap is I'm never going to be able to retire.
Yeah.
And live the lifestyle that I'm living now. And that's my goal is to live that same lifestyle in retirement. And the number one thing that's the scariest is health insurance by
Oh.
far at this point. You can't collect Medicare at 62, so I
Yeah.
can't
You gotta
afford to
wait
pay
till
for
you're.
my own health insurance for the next 3 to 4 or 5 years, whatever. But
Yeah.
yeah, it's one of those things that I would, and that's actually part of the channel that I'm starting is more based on that kind of stuff. Is how do you plan to retire when you didn't respect your money in your 40s and 50s?
Yeah.
It's
Yeah. So what
and
you're in luck. Social Security is still around, which is good. I will never tell you that you can live off Social Security because you can't, and
yeah,
you
no,
can't live
yeah,
comfortably. But you can. Social Security supplements a lot of Americans with the basic essentials, and that's they'll get Medicare withheld from their Social Security pay, and they can use their Social Security payments as a form of, payments for medical treatment, which is very, very beneficial. But you're right. If you don't have another retirement account, you're done. You
Yeah.
might as well dig your own grave at that point.
And I just think there's so many Americans in that right now that are turning 60, 62, that are now just thinking of retiring, who really never put much thought into it before.
Yep.
You hit 60 and your life changes. For me, it did. At
Yeah.
60, I started thinking, my God, I'm getting ready to retire. And you look at your savings and you go, yeah, no, you're not.
Yeah. You're
But
working
these
to
are the time of life. I mean, I've got 3 million miles with American Airlines. I could fly anywhere in the world for probably the rest of my life for free. I want to be able to use that when I retire, but it's like I didn't plan for it, and I did, pardon my French, a lot of stupid shit. That I wish I would have been a little bit smarter back in the day, but here I am, and trading is what I see as my my crutch. It's I'm doing okay at it, making some money at it, and I enjoy doing it. I love doing it. So, but it's man, anybody that if you're listening to this podcast and you're in your 40s, start saving money. Don't
Yeah.
don't end up like me. Don't be 60, 61 and wondering when and how you're going to retire.
Yeah.
Be smart about your money early, and God, I wish somebody would have taught me that. And that's a shame that it's not taught in schools and even in college.
I agree with that.
I'll say one thing to that has helped me save money is one of my good friends is an investment advisor, money manager, whatever you want to call them. And I am against that because they take a fee, and I think I can outperform him. And some stocks, some picks I outperform, some he outperforms me. He's very smart and he's done very well with the money I'm giving him. But just in having that, it makes me more conscious to giving him money. He'll reach out to me when I haven't given him money, and he'll say, "Hey, just checking in. It's important. I'm not asking you for money. I'm just saying, I want you to be able to retire on time. I want you to be able to have
Give me my fees.
Give me my money, basically email." But
he's poking you in the ribs, going, "Hey, come on."
Hey, but it's good. It's great discipline for me because I'm like, he's right. Like I shouldn't be Uber Eating on Sunday when I can go take the $20 and give it to give them that $500 that month or whatever.
I'm very proud of my daughter works for the state of Illinois, and she'll be able to retire at 45 at a full pension. I mean, I didn't have those opportunities. That I didn't have a pension with. I chose a different route, but I mean, my God, that is so important. We're talking about taxes, I know, here on this episode, but retirement and how you set yourself up for it is so important. And you don't want to be the guy sitting there when you're 65 going, well, maybe I can retire at 80.
Exactly. No, and
you've given a lot of insight to that tonight. You have helped me tremendously on some of my thoughts anyway.
And those IRAs and 401ks and the tax favored accounts, they are great. I would say if you're a young guy, don't put all your money into that. Don't rely on those as your savings account. I mean, I always tell people, take your riskiest trades in your Roth IRA.
Yeah.
Because if you
can we maybe get you back, Philip, to do a
absolutely
segment on Roth IRAs and what's the other term, the mega Roth backdoor?
Yeah, the backdoor Roth. Yeah, so IRAs, we can get into that later, but IRAs are weird and Roth IRAs are weird. You can only contribute up to I think it's 7K and 25.
7.
Yeah, and 24.
But that's something that I'm actually doing this year, and
if you're
my
older,
account
catch up.
I'm making the max deposit and I want to switch all my trading over to it.
Yeah, because I mean, what I see all the time with people is, a lot of for me, right? I bought Nvidia and Palantir early, And I'm sitting here
My
like,
man.
dang, I'm like, dang, I can't sell these stocks. I'm gonna have to pay half of it back. It looks prettier in my portfolio looking at it every day than it does in my pocket, paying the tax on it. So
Yeah.
I always suggest the Roth is great. And one thing about the Roth that people don't understand is like, well, can't you not pull it out until you're 59 and a half? Well, yes, you can't pull out your earnings until you're 59 and a half, but you can pull out your contributions whenever you want. And so that's something, everyone's like, well, I can't touch it if I put it in there. Well, yeah, you can. It just, you don't want
Shouldn't.
to. You shouldn't, but you can, and you'll be fine. And you won't
Yeah,
get
and that
penalized.
you're right though, because that's the same thing I hear from younger people is, well, if I put it in there, I can't take it out till I'm 55. I'm like, whoa, you need to really understand what the Roth is, because you
What
have
the
the
Roth is, yeah.
5 year. It's There's a lot more to it that is so advantageous and you're controlling your investment. You can buy your house with what's in your Roth.
Exactly. Exactly.
Man.
There's so many benefits to it that. And there's I would say that there's a reason that we don't hear a lot about it, and it's just that they don't want you to know.
They don't
You
want you to know.
know, we absolutely have to have you back on, Phil, because I think
Absolutely,
I
dude.
think we could talk for hours and hours and hours. And I
Yeah.
I I, I mean I've enjoyed this. This has been awesome. You have been a absolute wealth of knowledge and answered every single question
Hmm.
awesomely. You
Yeah.
know,
Thank you.
we would love to have you back on. We think that,
Absolutely.
I mean, this is such an invaluable resource to have somebody who trades his own, is a Palantir god and owns a ton and owns like 6% of Nvidia, has to file 13F or whatever G or
Yeah.
whatever.
There you go. Yeah.
But it is such an asset to have you on here, and we'll have you back. I'm gonna call this one quits for now because I think we've
Yeah.
covered a ton, but I know for a fact that we're going to get a ton of comments and new questions for you. And I think
Yeah, Philip, thank you so much. This has
it's
been
Yeah.
only right.
absolutely amazing.
Yeah. No, yeah, I'll leave with this is that a lot of this stuff you can look up on ChatGPT, but always ask ChatGPT to cite its source. And if it can't, then that's when you know. And
Hmm.
I use AI every single day, but it does make mistakes. So I'll, I'll leave with that is that use AI if you have your own questions, but if it's very complex, always consult a professional. And I would consult a couple of them. I think they're beneficial, and it's good to plan your end of the year around your tax bill, because the two biggest costs you'll pay in your life is inflation and taxes. And
Hmm.
so if you can
Did you hear
mitigate one
that,
of
guys?
those,
Inflation and taxes.
two
We
biggest
don't want to
expenses
pay
of your
any
life.
of those.
Right. Exactly. So, but yeah, it's been a pleasure, guys. Thanks so much for having me.
Yeah, man. Thank you
Philip,
so
thank you,
much.
man. I really enjoyed it. Really
We
enjoyed it.
will we
I
will
hope to have you back.
certainly have you back, and thank you so much, man. We'll have more questions jam packed. I can't wait to get this one out. And thank you, Acro. Thank you, Philip. And have a great one, everybody. Please subscribe, help us out, get this very important information out to the
Share
masses.
this video.
Like, subscribe, send this to your mom, send this to your 18-year-old cousin that just started trading options, and and follow us. All right, guys. Thank you so much, everybody.
All right,
Yep.
guys. Love
Yeah.
y'all.
Thanks,
Peace
y'all.
out.
Peace.